Thanks for joining us at xm.com. This is a Forex Preview video. We'll be having a look at the political developments in the UK data coming up, and of course the outlook for the pound. I'm Christina Marujos. Joining me today is lead investment analyst Rafi Boyadjian. Now, Rafi, economic data might take a back seat as political turmoil is taking center stage in the United Kingdom, with threats of a Scottish referendum growing louder. How are the political developments likely to affect the pound?
Well, Christina, it's been a busy few days in the political scene in the UK. We had local elections last Thursday, as well as Scottish Parliament elections as well. We also had Welsh Assembly elections. So the pound got a little bit of boost from the Tories doing better than expected, because Boris Johnson's party actually did rather well in local elections across England. There was even a by-election which the Tories won, that's seen from Labour. And all of this has boosted Boris Johnson's chance of winning a second term. However, when we look at what happened in Scotland, there are some worrying developments there. Of course, nothing totally unexpected, because the SNP already had a very strong grip in politics in Scotland. And although they did win for one seat short of a majority in the Scottish Parliament, they still nevertheless are still pushing on holding a second independence referendum at some point of the next few years. So the markets we saw were rather pleased with the fact that the SNP didn't manage to win an outright majority. However, markets might be getting a bit ahead of themselves, because the Green Party in Scotland, they gained 2 seats, and in fact together with the SNP, so the pro-independence parties do in fact have a majority, because the Greens also support independent Scotland. Now the question is, how will the UK government respond to a fresh request for another independence referendum? Boris Johnson has said it's not the right time, it's not the time now to be thinking about having a referendum because of the pandemic, and of course they don't want the UK to break up. So there's a strong chance that if it does come to that, the UK government might block the request for a referendum. And if the SNP or the Scottish Parliament was to ignore that, then we could be facing a prolonged legal case, because then it would be up to the Supreme Court to decide. But markets don't see any immediate risk of a referendum. That's probably down to the fact that the SNP will probably hold off holding a referendum just yet because of the pandemic. So maybe markets aren't too worried, and maybe by that point, maybe there will be even less support in opinion polls for another referendum. So markets are pretty much shrugging off the independence referendum risk and focusing on the fact that the Conservatives, which are seen as a pro-business party, did better than expected, in England at least.
And now let's turn to the data. We're expecting GDP numbers for Q1 on Wednesday. The print covers a time of widespread lockdowns and restrictions. However, the pound has been performing quite well lately. Recently, it even shot above the 141 resistance. Therefore, how can the data impact the currency?
So we're seeing this big boost in the pound, and it did shoot above the 1.41 level. We could even be seeing the 1.42 level soon. The combination of the election results, the boost from that, and of course the weaker dollar following that poor NFP report. So all of this has given a strong upside for sterling. Now, as far as the GDP numbers are concerned, if they are worse than expected, we could perhaps see some of the steam coming off overall, though we're not expecting a huge impact from the data in the currency markets. Now, as you said, we had throughout the entire quarter, the UK was pretty much in a tight lockdown, but nevertheless, we were only expecting a contraction of 1.6% on a quarterly basis. That's basically a sign that businesses have now adjusted to operating differently, operating under restrictions and doing things online and so on. So it's not quite as devastating as we saw in the first lockdown in 2020. But even if the data is worse than expected, we're going to have a whole bunch of data. In fact, on Wednesday, we're going to have the separate March readings for GDP, industrial production, trade and construction and so on. So if all of those data point to an upturn at the end of the quarter, that could possibly offset any disappointment in the headline GDP number. On the whole, though, probably going to see a short-term reaction, and on the whole, traders are focusing on the fact that the UK is gradually easing out of lockdown. We're seeing the economy reopen, and combined with the weaker dollar, all of that bodes well for sterling in the coming months.
Rafi, thank you for joining me today. This was a Forex Preview. Thanks for watching at xm.com.